Hey everybody, welcome back to Dividend Stockpile. I'm very excited to introduce Will Rhind, founder and CEO of GraniteShares. They are an ETF provider focused on providing innovative, cutting-edge alternative investment solutions, and they have over $10 billion in assets under management. Today we're going to be talking about their brand new suite of products called YieldBOOST. And in particular, we're going to be talking about TQQY and YSPY. So with all that, Will, welcome to the channel.
Thank you so much for having me, Jeremy. Absolute pleasure.
Thank you. Yeah, really looking forward to our conversation. Been looking through some of your products, and I think they're going to be a great fit for our audience here. I know that GraniteShares has a lot of different ETF options out there, but the one we're going to focus on today is the YieldBOOST. So can you kind of give us a little bit of background on how GraniteShares started, as well as this YieldBOOST suite of products you have?
Sure. So GraniteShares started 2016. We started in New York. We're still headquartered in New York City. We went live in 2017 with our first funds, and we've been growing the business since then. So now, fast forward to 2025, we're a global business. We manage over 10 billion. We have products in European markets, and we have a team in Asia that distributes, principally the US listed ETFs to major markets and customers in Asia. I would say that the business is really focused on what we call high conviction investment strategies. And those range from things like individual commodity plays to leveraged ETFs on single stocks. And of course, today's focus, the YieldBOOST range of ETFs, which are very high income or high yield generating ETFs. And those have been a really big success for us. We started the YieldBOOST family at the end of last year. We've grown that to 6 ETFs already. And the popularity is really sort of exploded in the last few months. So a great place to start the conversation.
Yeah, I noticed that the assets under management on each of these funds has definitely been doing really well. So congratulations on that. I'm looking forward to digging into it. So in the YieldBOOST suite of products, you have individual security focused ETFs, and then you also have the more of the index variety. So the ones I'm showing is one based on coin, NVIDIA, Tesla, Bitcoin, and then the Qs, and then SPY. So those are the ones that you have right now. So what made you guys decide to do these types of products for these particular focus areas?
Yeah, so I think what YieldBOOST is a marriage of some of our most successful ETFs, which are leveraged single stock ETFs, with yield or with income. And so specifically the secret sauce behind YieldBOOST is that we are executing a put option spread, which means in simple layman's terms, we sell options on underlying leveraged ETFs to generate the income that we distribute on a weekly basis to investors. And then we buy put options also on the same underlying ETFs to offer some downside protection, in case the value of that falls. So that's the spread strategy, and that's how YieldBOOST is able to generate, some of the highest yields in the market. Because if you think about, if you take your example of YSPY or TQQY, which are ETFs where the underlying index ultimately referenced is either the S&P 500 or the NASDAQ 100. To take an example like that, if you were to sell a call option on one of those indexes, then you might expect to generate somewhere in the region of 10 to 12% in terms of yield. Now, that's not bad by any means. But if you were to sell a call option or sell a put option, as in the case of YieldBOOST, on a 3 times leveraged version of that index, then by definition, you would expect to receive 3 times the notional premium times the yield or the income, however way you want to look at it. And that's why those funds are able to generate around 50% in terms of yield and not 10 or 12%. So that's the big differentiator with YieldBOOST.
Yeah, so on my personal investment style, I write put options and call options and things like that. One of my favorite ones to do it is on the triple leveraged ETFs, because you do get the added volatility that comes with it, 3 times leverage. So I do the TQQQ, I do the UPROs, the TNAs, all those types of things that are the triple leverage, and that's how I'm able to get the returns that I get on my option selling. Now, option selling itself, itself has become very popular over the last couple of years. And then, a byproduct of that is this option selling ETFs. So what do you think in the marketplace has caused such an explosion in these types of ETFs right now?
I think what's happening, Jeremy, is we're moving into an era of hyper specialization.
Mm-hmm.
So it used to be the case that if you wanted a bit of income, you'd have to buy some generic mutual fund that sort of purportedly gave you growth and income. And in reality, what ended up happening was you got really neither growth nor income. And so with ETFs, obviously, the great thing about ETFs is you can have an ETF on anything. It's like the Apple saying, there's an app for everything. And with ETFs, it's very much the same thing. So what we've noticed is that there's a hyper specialization where people are really looking at ETFs for the exact job that they're looking to do in the portfolio. So for example, if you want hyper growth, people are going with leverage, or people are going with thematic exposures that give them exposure to whatever type of theme. Or if people want income, then there are umpteen different income options, but the higher the yield, people are going for things like YieldBOOST. So I think that we're seeing this level of hyper specialization where people can decide exactly what they want to put in the portfolio. And if you want to optimize for income, it's very easy to do that. If you want to optimize for growth or value, it's easy to do that too.
That's what I love about all the innovations you guys have created in the ETF spaces. It does give us access to all these specialized products. As you said, it used to be, you get dividend stocks or dividend ETFs, and you might make between 3 and 5% a year on yield. But for some people who need higher income or don't want to wait as long as it takes for those to increase their dividend over time, the yield on cost, now we have these income products where you can get, even on the more conservative ones, 12, 15%. And if you think about how much the market has returned over historical averages, I mean, you're already making your historical averages just on the yield alone. And then for those who want that extra boost in income, your products like yourself offer that opportunity. Now, as you are very aware, there's other ETF companies out there that are doing similar high yield options-based ones. Some of the most popular that I know about is like NEOS funds and YieldMax. So I think you mentioned a little bit at the beginning, but can you give like a differentiating statement between what you guys do and what maybe those teams do?
Yeah, I mean, in its simplest terms, what YieldMax is doing, for example, is selling call options on underlying stocks. What we are doing is selling put options on leveraged versions of either those stocks or their respective index underlyings. We are also buying put options to protect against some downside. So the YieldBOOST proposition is not just about giving you some of the highest yields available in the market, but it's also offering some downside protection. And that's the key variant on the put spread. A lot of the other guys out there are selling calls, which is fine. That gives you yield, but you get 100% exposure to the downside, which was the design change we made with YieldBOOST. So I think in terms of the proposition, it's some of the highest yields out there. The secret sauce is that we're selling and buying options on leveraged ETFs. That gives us 2 or 3 times the notional amount of premium or yield that competitors do. And then it's weekly payments.
Yeah, those are all huge benefits when it comes to option selling, especially like the YieldMax, where they have very high distributions. To your point, they have 0 downside protection. So yes, you're getting this great amount of income, but you have all the downside risk. And so while they might pay out, say 100%, the total returns are much less than that. And so by having that the put option there to protect you on the downside will definitely go a long way to protect the overall long-term viability of the fund. So that makes a lot of sense to me. All right, so let's go ahead and transition to deep dive into 2 of these products that we mentioned at the beginning. It's TQQY and YSPY. The GraniteShares YieldBOOST products, one's for the QQQ underlying and one's for the SPY, the S&P 500. So I guess let's start with the SPY one. So what is the overall methodology on that one in particular?
Yeah, so with that one, we reference an underlying 3 times leveraged ETF on the S&P 500, and we're selling put options on that underlying ETF to generate the income or generate the yield. And then at the same time, simultaneously, we're buying put options to provide some downside protection. So that's our YSPY ETF. And again, the ultimate underlying index is the S&P 500.
Yeah, so I was looking at some of the facts. It looks like just over a 50% yield on that one, which is really great. It started just about a little over 6 months ago now, so it's definitely has some time in the market. And that one pays out weekly, correct? Is that what you mentioned?
That's right. So all the YieldBOOST ETFs are weekly.
Okay.
We have six ETFs in the market. We're obviously trying to expand that quickly, but yes, they're all weekly payers.
Okay.
And that's
And then when you're writing put options, obviously
Yeah.
you don't own the shares at this point. And so what
that's correct.
what do you guys do with the cash that's on reserve for those options while you're waiting?
Yeah, so the cash is held by the fund,
Mhm.
and so when we sell the put options, we are obviously in a position whereby we generate that income. The income is distributed, but there are assets in the fund whereby if we have to then go and buy that option back, that can be supported by the assets of the fund.
Now, I believe if I read it correctly, you guys use flex options, so you're able to pick out the details of what you want the contract to look like. Do you guys ever let it exercise, or is it always closed out early?
We just roll on a weekly basis. And again, the reason for that is precisely as you say, because we don't take delivery of the underlying. The objective is purely to generate income and to provide some downside protection. So an important point here is that for those that don't know, flex options, particularly European flex options that we use, are bespoke contracts that are negotiated between us and the broker dealers that we ultimately use to execute them. And why that's important is because it means that regular investors cannot do the same thing YieldBOOST does. So the reason why, as you mentioned, Jeremy, you're selling calls, or you're selling puts, or buying calls or puts on leveraged ETFs, and you're doing that through US listed options.
Mm-hmm.
And that's a perfectly viable strategy. But what YieldBOOST does is something a little bit different, which you cannot replicate. And so that's why you buy a fund like YieldBOOST, is to be able to replicate that exact performance that you can't do on your own.
Yeah, that makes a lot of sense. And, you're paying a professional to do it. So, whereas I kind of understand how to write options and how to do it and what to look for, not everyone does. So by providing this service to investors, they can benefit from your guys' expertise and your knowledge and get that, 50% return at this point without having to do the work themselves.
Yeah.
One thing that's really important when it comes to options writing is the in the moneyness or out of the moneyness. So can you talk a little bit about what your range is of what you're looking for?
Yeah, so typically when we sell, we're selling close to at the money. Sometimes it might be at the money. Sometimes it might be slightly away from at the money. It just really depends on the strike price of the option and what the portfolio management team feels as the best option at that time. But on the puts that we buy, we're looking typically to buy puts that are around about one standard deviation out of the money.
Mm-hmm.
So again, looking to sell a put option that's around at the money, and then buy one that's around one standard deviation out of the money.
Okay, that actually makes a lot of sense, because by selling the one right at the money, you're going to get the most yield on it. And then,
That's
the
right.
bot one is giving you a certain level of downside protection that if it goes any further than one standard deviation, you're going to be protected. So
That's right.
I think that's a really good combo. And it looks like, from my overview, is the YSPY and the TQQY both run the same strategy, just on different underlying ETFs.
Yep, that's exactly right. The only difference between those ETFs and the other YieldBOOST ETFs that are on single asset underlyings is that in the index space, you have ETFs that can be 3 times leveraged, whereas in the single asset underlying space, but particularly with stocks, the maximum of 2 times. So all the other YieldBOOST ETFs, the underlying ETFs that we're selling or buying options on, they're 2 times leveraged. But the index ones, you can go to 3 times, because they're available in the underlying ETF market.
All right, awesome. So thank you for talking through your different index variety ETFs as well as your single stock ones. And I think you mentioned it a little bit at the beginning, but can you go a little bit more detail about which type of investors might benefit from this type of ETF?
Sure. So I think the I mean, any ETF or any investor can benefit from ETFs. So the great thing about ETFs is they can be bought and used by everybody. I think when it comes to YieldBOOST, we have to say that these are buy and hold ETFs. They're weekly distribution ETFs. Although the underlying ETF that we're selling or buying options against is leveraged, YieldBOOST ETFs themselves are not leveraged, and that's an important thing to say. However, they are very, very high yielding, and therefore they are higher risk than, say, treasuries or other, dividend or yielding products. So clearly, if you buy something, I think one of the highest yielding one we have is our Coinbase, the COYY, which is around 180% per annum. So clearly, there's no free lunch or there's no trade-off in terms of the reward versus the risk. And so the more potential reward you're getting, the more risk you're taking. So the actual stocks themselves or the ETFs themselves will be more volatile, but the yields are obviously very high as a result.
Yeah, just looking back earlier in 2025, the tariff meltdown and everything, I had a couple of positions in some of these triple leverage ETFs, and they tanked pretty quickly. But the reverse is also true. They can go back up pretty quickly as well. So you just have to understand the volatility is embedded in those types of ETFs and just plan accordingly. Know what your risk tolerance is before you hop in.
Right, yeah, so exactly. And I think the other thing that we see is, one, we see a lot of people just buying these ETFs as part of an income strategy. But I think also it's worth mentioning that, when you have an instrument that is yielding such high amounts, by blending it in with other instruments that yield less, that creates diversification. So, we also see people using YieldBOOST as part of a broader income strategy, whereby you might marry some YieldBOOST ETFs with some other income or yield producing assets that are less volatile. And then ultimately, from a diversification perspective, you get slightly more yield in the portfolio for slightly less risk.
Yeah, that actually makes a lot of sense. For me, my high income ETF allocation is about 20 to 25% of my portfolio. The rest is in dividend ETFs, dividend stocks, some of the lower yielding, more stable. But I wanted that, boosted income, which is exactly what these products can offer. Two more questions for you before we go. Are any of these ETFs that you're doing, do they have favorable tax treatment, or are they considered your regular income?
Yeah, so I think it really depends on the actual composition of the income. So I think that those people that invest in this asset class are probably quite familiar with this, but you do get, and we publish all of these numbers on our website, but I would say the majority of the distributions that get paid out, so the majority of the yield, the composition is more return of capital than income. And in some cases, it's 100% return of capital, which is obviously a more favorable tax treatment than taxable to income. But that really just depends on the composition, and that will depend ultimately on the actual end result of the week from where the options trades all ended up.
Yeah, that makes sense. A lot of people are concerned with ROC because they feel like you're literally getting your money back. But what it really is just a tax treatment on the income that the options generate.
Yeah, that's a good point, because that's absolutely not true in the case of YieldBOOST, because what that typically means is that, and this is more relevant with funds that aim to give a target yield or some kind of promise to investors around, hey, I'm going to try and give you 10% per annum. Yeah. And what you see in some of those strategies is what we call bad return of capital. And bad return of capital means you're selling assets of the fund to generate the money for that distribution, which is literally, as you say, it's just you're selling assets of the funds or returning investors of capital. Yeah. What's happening here in terms of YieldBOOST is all YieldBOOST is doing is selling an option and buying an option. It's the composition of the distribution, and it's just a tax. It's just purely an economic or a tax, consideration. And depending on where that strike gets executed, then that can be the return of capital or not. But it's not the fund selling assets to deliver some kind of yield. Yeah,
that's always one of the things that the critics of these high yield ETFs try and push on you is that, oh, you're just getting your money back, and that's clearly not the case.
They don't understand the return of capital.
No, exactly. So I'm glad you're able to explain that a little bit more. And for those who, you do get return on capital, what it is reduce your cost basis while you're holding the ETF. Then if you ever do sell in the future, your cost basis will be lower, so your taxes are going to be different. But if you've held it long enough, you might get long-term capital gains as opposed to regular income. So either way, even if you sell after a year, you're still going to, generally speaking, get a better tax treatment than you would if you got a regular income distribution.
Correct.
Okay.
Yes.
I appreciate all the information talking through your funds. What is the best way to get more information about these YieldBOOST products?
The best way is probably ultimately on the website, which is graniteshares.com. That's where, from a regulatory perspective, we have to post all the information, the daily portfolio holdings, etc., for every ETF that we have. However, we recognize that for a lot of people, social media is the easiest way to keep up with things. So if you follow GraniteShares, for example, on X, which is the main outlet for this, we publish the distributions on a weekly basis and other key news and events that are happening with the funds, any corporate action, for example. So sometimes we find that you'll find it easier just to follow on X, specifically if they're users of X, obviously. But ultimately, it's a combination of the website and that.
Okay. Yeah, I'll make sure to put up all those links and the X handle and everything like that when we're done. All right. So thank you again. We talked about TQQY, the GraniteShares YieldBOOST QQQ ETF, and YSPY, the GraniteShares YieldBOOST SPY ETF. Will, really appreciate all the information, and thanks for joining us.
Jeremy, thank you so much for having me. Pleasure to talk to you. Thank you for your time.
Thanks for watching. While you're here, check out this next video to learn more about dividends, income investing, and option selling. And while you're here, make sure you subscribe. Click the like button. It really does help. Thanks.